Joining us now for a deeper look into today's Apple event and the tech sector, Steve Milunovich. He's technology strategist at Wolfe Research. Steve, good morning.
Great. Thanks for having me.
So you heard the setup there in terms of Apple. Let's start with that in terms of how you're thinking about, this particular product generation, what it means, if much of anything, for the upgrade cycle for iPhone, and how it fits into how investors ought to be viewing Apple right now.
Well, sure. Well, I should say, first of all, today I've become technology strategist at Wolfe. So my colleague Andrew Vodheim is now the lead. But, our
Apple,
view is on Apple, specifically, although I am backing him up. Look, our view is that this is kind of an incremental announcement, at least on the iPhone side. We'll have 3 new models with a triple lens camera. We're looking for pretty flat iPhone units over the next couple of years, so it really does move the impetus to services and wearables. And I'm glad to hear people talking more about wearables. We've always felt that that's been sort of overlooked. It's not been financially material, but now with the iPhone pretty flat, it's a couple points of revenue growth each year. So you combine that with services, and you could get at least low single-digit growth looking forward.
Hey, Steve, just to put a fine point on that, you think it's been overlooked because people haven't paid enough attention, or because we always had bigger drivers than this? Has wearables really become a bigger piece of it, or is it just because everything else has become, or because iPhones have become a smaller part? Yeah,
last quarter, Becky, was the first one that the iPhone was down to about 50% of revenue. So clearly the iPhone's always been the big story, particularly on this day every year. So that's been one reason people have overlooked wearables a bit. But I think they also underestimate what Apple can do here, the other types of things they can potentially put on our body. Clearly, smart glasses would seem to be the next big thing. Augmented reality is something that Tim Cook has talked about quite a bit. But one thing we talk about as a tech strategist is some of the future trends are going to be AI, obviously, but also ambient computing. Computing that's all around you. It's on you. It's around you in stores, around you in the home, hopefully in a fairly customer-friendly way. And that's where Apple is so good at creating that positive customer experience. So I think wearables is a big part of the future.
Broadly on tech right now, we were talking before about how a lot of the most popular kind of big software names, cloud names, really pulled back sharply. You've had this rotation going on in the market. They've been leading. Semis did well again yesterday. How are you thinking about tech in general right now as an opportunity?
So tech in general, we're thinking kind of a market weighting. We certainly like tech longer term, but you've got the PMIs under 50, the ISM new orders just broke 50. And when that happens, traditionally, you see tech PEs contract, earnings come in. We look at analyst estimates for next year, particularly in semis, and we think they're a little bit on the optimistic side. So that's why we think there may be limited near-term upside in tech. From a sector standpoint, we're overweight services and internet. And you mentioned software. We're actually market weight there because the big change in the last 3 months in tech has been software has faded, had been by far the best performing sector. So you've got some tough comps there. On the other hand, semiconductors have taken off. And I'm still a bit concerned that we've got high inventory levels there. The analysts really seem to be already discounting a significant comeback in semis next year. So semis and hardware underweight, overweight internet and services.
So internet, Facebook and Alphabet, big part of that, I assume. So how do the investigations fit into that? Just as a general sentiment headwind, or is there general business risk here?
Yeah, I think it's probably a little more sentiment at this point. So we are moderately positive on FANG. When I look at FANG, obviously, regulation is probably going to limit the upside to some degree, so the next 5 won't be as good as the last 5 years. But these types of companies who are really successful in tech tend to have 10 to 20-year runs. So I think there's still 5 to potentially 10 years for names like Google and Amazon and Facebook to make some hay. I also don't see the next major disruptive technology that's going to get them. Regulation, historically, in the case of IBM and Microsoft, has caused them some issues in the near term, but the real problem was that it sort of distracted them enough that they missed the coming technology disruptions. And that's going to be years away. So from that perspective, I think it limits the upside. They probably won't be able to do as much M&A. Yeah. But I think the real negative of regulation could actually be years away.
So even if management is distracted, they're not likely to be blindsided by something that's the next new thing, you mean?
I don't think so, because we're talking about things like artificial intelligence. Who's the leader in AI? Well, it's Microsoft, it's Facebook, and so forth, obviously Google. So maybe there's something coming. One of the things we're looking at is the internet was supposedly going to make the little guy powerful, really decentralized. It hasn't really happened. In fact, we've had these huge platforms, almost the opposite. So I do think you could see maybe more decentralization, peer-to-peer capabilities. That's where blockchain could actually make a big difference, and that could be a bit of a threat to the big platform companies.
All right, down the road. Steve, good to see you.
Thank you.